Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold over the US dollar chart. Now, as you can see, Friday, the final trading session of the week, we have seen a bounce here in the gold markets. A lot of retail traders would have got hurt today. I had a lot of people leaving comments on our video yesterday saying, this is it, gold's going down to 1762, it's going back down to 1700. But as I mentioned in yesterday's videos, guys, that you should have waited for that movement down to 1775. This is a typical movement done by the managed money firms. They will try and flush retail traders out. A lot of traders would have had their stop losses down at 1790, 1795, thinking that 1800 would hold. And as you can see, we had gold go all the way down to 1780. And personally, I actually thought it was still going to go a little bit lower than that. But now, as you can see, we're trading well back above 1800 at 1811. And we did go and retest a 200-day EMA. Monday is going to be the key trading session for gold to determine where it goes next. Some typical movements you can see is when we do get a daily close below the 200-day EMA, which of course is a very bearish development here in the gold market. But what you can see is a bounce to go and retest it and, to see whether it can be the new resistance area in this market. So you do sometimes get movements like this. So it'll be very interesting to see what happens on Monday. But also on the flip side, if we can get a daily close back above the 200-day EMA, and by the way, we could still get a daily close above the 200-day EMA today, as there's still another hour left. So you never know what can happen in the final hour of trading. But if we do get a daily close back above the 200-day EMA on Monday, well, then this would be defined as a false breakout. And then the bullish argument for the gold markets is definitely back intact. I am bullish medium to long term. You have the best traders in the world, the likes of Warren Buffett, who said that gold, in fact, is a much better investment than Bitcoin, which is a huge statement. I'm very, very bullish, and I want to let you all know again. I know I've mentioned this several times this year, but back in the 2008 and 2009 financial crisis, when we saw the same action from the Fed and the government with regards to stimulus packages to help boost the US economy. We're seeing pretty much the same now, but gold didn't hit its all-time high peak until 2011. So it wasn't until 2 or 3 years after the financial crisis in 2008 and 2009 until gold hit its peak all-time high. So if that was the same situation here for the gold markets, well, then we wouldn't see a peak high until 2023, 2024. So I'm very, very bullish. Joe Biden is expected to unroll the $1.9 trillion stimulus package, which is going to be huge. And I am very, very bullish here in the gold markets. The only way I would be willing to sell this short term is of course, on Monday, we break below the swing lows and we trigger that 1775 area. Remember, that's what I said in yesterday's video. If we do hit 1775, I then become a short-term seller down to 1700, which would indicate a move to the bottom of this holding pattern. RSI was basically telling us that we had overshot it to the short side in the short run, and as you can see, we're now seeing a nice bounce off the lows there on the RSI. So I am still short-term, medium-term, long-term bullish. However, as I mentioned at the start of this video, Monday is the key trading session to determine where this market goes next. But for now, I am still bullish.